Welcome to This Explainer. Have you ever made a totally impulsive money choice and immediately thought, why did I just do that? Well, you are definitely not alone, and you're in the exact right place. Today, we're uncovering a fascinating truth about money, why our brains constantly seem to sabotage our financial decisions, and, more importantly, exactly how we can use the latest science to literally rewire them for success. Picture this. Against all odds, you just won the lottery. You drive down to the lottery office, the director sits across from you and presents you with an incredible choice. You can walk out the door right this second with a lump sum of $5 million. Or you could choose to receive $250,000 every single year for the rest of your life. Okay, let's really think about this. If you're 35, quick mental math tells you the second option is going to generate way more money in the long run. Seriously, a lot more. Yet, the vast majority of us feel this massive, almost magnetic pull toward taking that $5 million bucks right now. Choosing the immediate cash over the bigger long-term payout isn't just a simple preference. It actually exposes a fundamental biological flaw in how we process money. Which brings us to Section 1, the myth of the rational investor. For literally decades, the entire foundation of economic theory was built on a pretty major misunderstanding of human behavior. Traditional theories, like the efficient market hypothesis, operated on this neat, tidy assumption that we're all perfectly rational agents, always making the mathematically optimal choice. But look at the real world. The subprime mortgage crisis, economic bubbles, they completely shattered that idea. Enter behavioral finance. Pioneers in this field proved that we consistently make irrational choices. That magnetic pull toward the $5 million, that is your emotion and bias totally overriding the math. Prospect theory shows we're incredibly risk-averse when protecting our gains, but the moment we face a loss, suddenly we become reckless. And this perfectly highlights a big gap in our knowledge. Behavioral finance does an amazing job telling us exactly how we act irrationally, but it doesn't really explain why. To understand the root cause, to really get at the why, we have to look under the hood at human biology. Let's dive right into Section 2, the hyperbolic discounting trap. Okay, so the fancy psychological term for wanting that cash right this very second is hyperbolic discounting. Basically, it's our deeply wired inclination to choose immediate, smaller rewards over future, larger ones. In our minds, the value of a reward literally drops off a cliff on a hyperbolic curve based on how long we have to wait for it. This psychological force is exactly why we undervalue delayed outcomes. In the real world, it's the bias that makes traders cut a winning stock trade short just to lock in a quick profit, or makes people raid their retirement accounts early, throwing away years of compound interest just for a quick fix. But why on earth do our brains do this? Well, you can blame our ancestors. First, we suffer from temporal myopia. We evolved to survive today's threats, meaning immediate survival completely overshadowed long-term planning. Add to that our deep-seated risk aversion. The future's uncertain, right? So we prefer the absolute certainty of holding a reward right now. And lastly, we have a non-linear perception of time. For the human brain, waiting just feels agonizingly difficult. Giving in to short-term impulses isn't a moral failure, it's structural. Let's look at Section 3, Inside the Financial Brain. We are stepping into the realm of neurofinance. It's a relatively new, mind-blowing field that blends neuroscience, psychology, and economics. Instead of just staring at spreadsheets, researchers are actually using tools like fMRI and EEG scans to watch our neural pathways light up in real time when we evaluate financial risks. And through these scans, we can literally see the anatomy of a financial decision. It basically boils down to two main players. First, you've got the prefrontal cortex. This is your brain's rational center. It handles logic, structured action, and long-term planning. Then you have the limbic system, home to the amygdala. This is your emotional brain, processing things like fear, rapid rewards, and stress. When you make a trade or a major purchase, there is an actual, observable tug-of-war happening between the cool logic of your prefrontal cortex and the emotional reactivity of your limbic system. And when that emotional brain wins, oh boy, we fall straight into the bad habit loop. Let's say you take a financial loss. That's your trigger. Your amygdala literally perceives this as a physical life or death threat and fires off a fight or flight response. The action that follows, usually impulsive or revenge trading to try and win it back immediately. And the reward is just a brief, totally false sense of control. The scary part is, every time you complete this loop, you strengthen those neural pathways. You are hardwiring your brain to react to financial stress with immediate, impulsive actions. But don't panic.
Here is the absolute best news of this entire explainer in Section 4, Rewiring Through Neuroplasticity. You are not stuck with the brain you currently have. Thanks to neuroplasticity, which is your brain's incredible ability to physically rewire itself and form brand new neural connections throughout your life, you can actually change. By deliberately interrupting your bad habit loops, like forcing yourself to walk away from the computer for 5 minutes after a loss instead of revenge trading, you physically reshape your brain to favor discipline, patience, and long-term profit. This whole rewiring process starts by shifting from a scarcity mindset to an abundance mindset. Scarcity is when you're terrified of losses, acting desperate, and keeping your amygdala in a constant state of threat. An abundance mindset, though, that keeps you grounded in your rational prefrontal cortex. You start seeing endless opportunities, staying patient, and focusing on learning instead of just reacting to fear. So, how do we put this into practice? Let's check out Section 5, Systems, Rules, and Wealth. To physically rewire your financial brain, you're going to need some practical tools. Think of these as guardrails for your mind. Internally, mindfulness meditation is huge. Studies show it literally strengthens the prefrontal cortex and calms the amygdala. Then you've got behavioral tools, like commitment devices that automatically funnel savings away before your impulsive brain can even touch them. Or future-focused priming, where you actively visualize your retirement to combat that hyperbolic discounting trap. Finally, systematic trading rules take the emotional guesswork out entirely. And AI financial assistants can help visualize compound interest, proving to your brain that saving $100 today is actually buying $2,000 of freedom tomorrow. A massive part of this is cognitive reprogramming. I want you to remember this phrase. Losses aren't failures, they're data. By using simple cognitive behavioral techniques to reframe a market loss as just feedback, you stop that emotional panic loop completely dead in its tracks. You are literally training your brain to analyze the data rather than freak out. So what does this all mean for you right now? Well, since your brain is constantly adapting to your habits, challenge yourself today. The next time you're faced with that choice between an immediate payoff and long-term wealth, just pause. Ask yourself, what is one disciplined financial choice you can make today that your future self will definitely thank you for? Whether it's automating a savings transfer, stepping away from a bad trade, or just reframing a loss as a lesson, take that action and start rewiring your brain for wealth right now.